Thanks so much for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Well, here we are Wednesday. We're in the middle of our trading week. And, well, USDA kind of surprised me a little bit. They came out with some overnight export sales news a little bit ago. I thought maybe things would be quieting down now with the Lunar New Year holiday. The celebrations kicking in here this week. But we had two sales reported this morning. Let's take a look at what they were this time. We have a sale of soybeans again, 130,000 tons to unknown destinations this morning. And we had another sale of corn, 100,000 tons also to unknown destinations. I want to bring in Brian Hoops, president of Midwest Market Solutions. Brian, why is it we never know who buys our stuff?
Well, we have a good idea who's behind it, Marlon. Usually it ends up being China. There's some rumors that the corn sales could end up being Japan. But, China's on their holiday, so they won't come out and say it's China. But, when you look at the weekly export sales that we do every Thursday morning, we talk about how it changes from unknown to a country. And a lot of times it ends up being China. And I think in this case, this is kind of just a free look for China to come into the marketplace and get almost like a free call option where they make these purchases, but they don't have to actually take shipments. They can cancel them at a later date if they need to.
So do they do this as a proxy? Is that what's going on? They just get somebody else to say, hey, we'll put it under your name for a while until we really need it?
Yeah, I guess. They just call it the unknown destination category. And then they switch it if they do accept shipments, and they end up switching it to China, and we see that happen continuously on the weekly export sales. So it's nothing new. It's been going on for years and probably will continue for years.
Overnight in the Globex trade, we had a mixed affair. Let's take a look at our prices, and our quotes are provided by bar chart here. Tammy mentioned earlier it was quiet in the corn. March was unchanged at 677. December was just a half-cent higher in the overnight trade. For whatever reason, Brian, they picked on soybeans overnight. Now, soybeans had the March going down 6 1/4 this morning at 14.82 1/4. But, I was looking at a minute-by-minute chart here of the finish of the Globex session, and it looked like it was, whipsawing around about 4 or 5 cents every 5 minutes or so on kind of on both sides of unchanged. So interesting trade here in the soybeans, but it ended up on a weaker note anyway. And then you had the new crop November soybeans finishing 4 lower overnight at 13.34 per bushel. Now, this would have closed up before we got that new announcement of overnight sales. Do you think that announcement will matter or not?
I don't think it really makes a whole lot of difference in the longer term of the trade in here. We may see maybe a small uptick right after the opening, but in the long-term direction, market's really focused on what's happening in South America because we know we're going to have supplies hit this market, and these purchases can be canceled at some point down the road. So with Brazil starting to harvest at the end of this month and into February, and then you're having good rains this week, and in the forecast for the next couple of weeks for Argentina, that crop has really stabilized itself, and there may be more crop being harvested than what was earlier anticipated, or at least what the market had built into when we were trading above the 15.25, 15.30 mark.
And on the wheat trade, we were higher when we finished up Globex. And on Chicago wheat, on that March contract, we were about 6 3/4 higher at 741 1/4. Kansas City wheat really firmed up 10 1/2 higher on the March at 844 1/4. And the Minneapolis wheat was also showing some signs of strength with March up 5 1/2 cents overnight at 908 1/2. Interesting where Brian was just telling me they had about a half a foot of snow in southwest Missouri overnight, and yet a stronger wheat market, it seemed like by and large it kind of missed most of the high plains area there in Kansas. All right, Brian, we'll come back and we'll talk about our livestock trade. What's the setup for a Wednesday? We'll discuss when we come back. Well, we're back talking with Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Time to talk a little livestock here. Brian, we actually, I believe after the close today, we get our cold storage report, right? Does it mean anything today to the trade?
Yeah, you're right, Marlon. 2 o'clock Central Time, that report comes out. It could give us some, I think, positioning today. there's a trend here. Average is to see a drawdown in pork stocks and a buildup in beef stocks in this report. So, you may see a little short covering, especially in the hog market as a result. We haven't really seen any cash cattle trade yet. And I want to call the market a little softer here this morning. One of the keys for direction for the cattle market is how many cattle we're killing each week. And that's going to be a sign of demand. And it sounds like these packers are starting to cut kills, especially on Saturday of this week. And that could soften our cash markets up. So I wouldn't be surprised after a real strong close yesterday not to see any follow through, actually see prices work a little bit softer early as we adjust to maybe some holiday, or not holiday, but just some shortened kill weeks. We were hoping to see 450, 60,000 head kill, and we didn't see that last week. And it looks like this week is going to be smaller than last week's numbers.
Seems kind of counterintuitive. We've had a pretty good rally in the cattle here up to this point. And yet on the commodity fund positioning, they're heavily net long, right, on cattle. It doesn't seem to really go hand in hand there.
Yeah, they are holding some pretty big net longs. And we've seen some commercials selling, but not a real aggressive, taking the other side of things in here. Where commercials have really gotten aggressively long is in the hog market. As we fall near long-term weekly support around 84, 84.10 in the April contract, the commercials have been very aggressive buyers as the funds have just, literally been selling this market and continuing to sell it without much in the way of any short covering rallies. Well,
let's look at how we finished yesterday on our quotes provided by Bar Chart on live cattle yesterday. We ended up a little higher. April was up 75 cents at 161.30. And on the feeder cattle trade yesterday, we closed the March 32 higher at 183.60. The other months were steady to a little weaker. On the lean hogs, we had April down just 7 cents at 85.37. Had been on both sides of unchanged. Just wanted to point out real quickly the beef cutout values yesterday down again. Choice cuts were down $1.80 in the afternoon update, and selects were down $2.10. So that downward trend continues. Brian, good to talk with you again. Thank you, sir, for all the help. Brian Hoops of Midwest Market Solutions. So, Tammy, we're about ready to kick off at the bottom of the hour.